So thank you very much. So first of all, building on the impressive panelists in the other sessions, and we certainly, we have another one. Hans-Peter needs no introduction, but as you know, and thanks to his incredible work with the Wolfsberg Group, and continues to be a senior advisor to that very important organization. Then we have Ibsen Laswed, sorry, who is a partner and head of advisory regulatory financial crime practice at Al Tamimi. And then we have Antoine Hubesh in the middle, who is an advisor of the Union of Arab Banks and a strategic advisor to the MENA FCCG. So let me welcome them all. So if we can, before we tee up the first question, is tee up the first poll question, if we're able to get that ready. So just to get in terms of your sense, and wanted to get your view and the audience view on what you think the perceived barriers to information sharing are. And I'd be very curious, particularly from a regional perspective, if there's anything there. So, do you think there are cultural or change management issues? B, do you think there are technological issues? C, do you think there are reputational risks associated with that? And tied to that, digging a little deeper, do you think there's sort of personal liability in case names are actually shared more broadly within the public sector? So if you can just take a moment to vote, and it'll be interesting to see what the results are. That's a very interesting result. Let me start with you. How do you react to the results there in terms of the personal liability aspect of it?
It's very interesting. Actually, I was sure that would be the answer. And the reason being is that we can see the trend in the market, generally speaking. Although we know about the obligations to report, etc., there's always this fear that anyone and everyone is mentioning. So people try to stay away from the burden in terms of compliance and obligations and find ways to escape. So even when I have clients approaching us and I would tell them, I would advise them to report, this is something that they are not willing to do, or they would try to say, I don't fall within this category, this does not apply to me, etc. And I would rather not do anything as opposed to putting myself in a situation where it's out of control. So I'm not surprised with this, unfortunately.
Antoine, your thoughts?
I'll just start with the obvious. Who are the famous whistleblowers? Who are the people who came out there and put themselves out there and said that there was money laundering, corruption in these cases, and came out a hero? There are absolutely none. I mean, starting from Snowden, WikiLeaks, all these individuals have been shunned. So that's basically how we perceive coming out. So the answer D is obvious for me. And second thing is, if we look at any survey in the MENA region, or even quite a bit across the financial sector, what's your number one worry when you're doing anything? It's not sanctions, it's reputation. So reputation is directly linked to the name, hence directly linked to the personal liability and being afraid of you being publicized. Mm-hmm. So it's quite obvious to me.
Hans-Peter, your thoughts?
Difficult question when you come from Switzerland. My answer number one to this is, let's talk about information sharing between banks and the public sector in this case, to define it. When I joined the bank, or when I took over compliance in '95, whenever we had a subpoena for information, we fought it to our teeth and we protected our clients, whether good or bad, because we thought that was our obligation and it would be bad to our reputation if we didn't do that. So no information at all. if I look at the world today, we now share information on our clients with the whole world because they get all the tax information. So this is 180 degrees different, and our reputation is still alive. So probably what would not have suited our reputation 20 years ago now is fine. And if I look back, some clients didn't feel comfortable in that environment of banking secrecy, and others probably have now joined us because they think in the new world it is much better when there is transparency. So banking secrecy is bad, but privacy is good, and therefore you have to subscribe to privacy, but to full cooperation with the public sector when you're hitting financial crime. I think that is today's rule. In the old days, it would have been bad for your reputation. It wasn't in the culture. Today, the culture has changed. We have to watch the culture. And now I think everybody's in agreement that there is a need and a right and a duty of a certain cooperation between the private sector and the public sector.
Ibsen, what do you think information sharing now is such a hot topic? Why not before? What do you think has changed?
I think, I mean, we see interesting things happening in the Middle East. Let's start with this, actually. And just to also break the stereotypes, the issues that we are talking about when it comes to information sharing are not just limited to this part of the world, you know. So every single country is facing the same issues when it comes to money laundering and financing, terrorism financing, basically. So information sharing is in process, progressing in the region and in the Middle East and in the UAE. So we know with the FATF review, there's a lot happening, and as a result, new regulations. It is challenging for practitioners, of course, because you need to keep up with the new regulations, but the information sharing would assist the authorities, the law enforcement, but also financial institutions to keep up with that trend, and hopefully with further cooperation, I'm hoping. But the point I would like to mention here is that it's not just about putting together or collecting data. At the end of the day, is what do we do, or what are we able to do with this data? Otherwise, you end up having a lot of information gathered by different key players, but then it's not as efficient as we would want it to be, basically, because, as you mentioned earlier in your presentation, one bank not willing to share with the other bank, etc., and that's the type of challenges that we are still facing. Although the issue about information sharing is there, it is being addressed with the new set of regulations. So there is an emphasis in terms of what we should be reaching to, but yet the challenges are there.
And Antoine, as, you know, picking up on the conversation, the presentation this morning, which I thought was very interesting in terms of some of the MENA FCCG priorities, how do you see the concept of information sharing and greater public-private partnerships working out in the MENA region, and how does the MENA FCCG sort of fit into that construct? I'm
going to give you my personal opinion, and then later on my professional opinion as the strategic advisor. Personally, let's start off with who are the perpetrators. This data is supposed to point to whom. From my personal opinion, from every single survey, crime is moving into legitimate businesses. So that's going to be a world of data to go through. It's going to be a lot more difficult than finding individuals that are doing something wrong. Specifically in terror financing, the amounts are becoming lower and lower. So I personally believe it's an extra burden on the banking sector. It's going to be a lot more difficult without these partnerships. That's where I get to my professional opinion. Without these partnerships, the banks are not going to be able to know. I mean, I remember I was sitting in a meeting with a lot of intelligence agencies, and they were saying, look, we're looking for individuals that are buying camping gear. That was, you know, I could start divulging this information because now it's passed. You know, people that were leaving from Europe or United States going down to Syria, the first trigger was camping gear, okay? And when they were discussing this with banks, they were like, do you know how many people buy camping gear off their credit card? This is, you know, it's going to be incredible for us to start looking into that. So yes, definitely, I think it's a major burden on banks, and without the partnerships, you know, banks are going to be even in a greater fog trying to pinpoint individuals that look or suspicious. Noting that crime, every single intelligence agency tells you, They're getting into legitimate businesses, using poor individuals that have SMEs, buying into their businesses, hence linking back to what Mr. Mansour was saying this morning, beneficial ownership. So all this closes the loop.
And what about MENA FCCG's role in?
MENA FCCG is trying as best as it can. First, let's put strategically. We're strategically trying to help smaller banks go. Because all statistics point to that smaller banks' investments in technology are weaker than larger banks. That means they are going to be the weakest link in this entire conundrum of problems. Our role is first to give guidance to the smaller banks. Second is to try to start generating these public-private partnerships in order to say, we want to do this, but here are our problems, and how can you help us solve them? One of which is legitimate businesses going into organized crime. What can you expect a smaller bank with minimal investment in technology to be able to do?
And just picking up the work, the ongoing work between the Wolfsburg Group and the MENA FCCG. I know that the public-private partnerships is a very specific term for some very specific legal and operational arrangements, usually governed and championed by the governments themselves. But if you sort of think outside of that, with still the principle of greater information sharing between the correspondent banks and the regional banks in MENA, where do you see kind of potential progress or collaboration in that space, Hans-Peter?
I think the catchword here is de-risking, where smaller banks have been considered higher risk, in particular when they're in high-risk countries, and therefore they are running the risk of losing access to the international financial system in a way, and in the end they lose their existence. I think we all, and the big banks as well, have a responsibility to help those smaller banks to stay in business, because it is bad for the economy if we see such a concentration. That is why I mentioned with creating the KYC registry, which the Wolfsburg Group has been instrumental together with SWIFT. We are giving the smaller banks a platform where they can put all their information. Second, with a so-called Wolfsburg questionnaire, which helps the banks to do a due diligence, there's a standardized review that a bank has to do. It's a bit like an FRTF review for an individual bank, a kind of a self-risk assessment. We create transparency about what a bank can do. And thirdly, and I think that is also important in the end, is that the burden on the smaller banks is probably becoming too high, and therefore we have to help to create structures where, like in a cooperative or through utilities, those smaller banks can outsource some of the compliance work, such as running payments through filters, to central utilities that allow them to do the job properly, to do it transparent, and to do it effectively so that they stay competitive.
And picking up on the correspondent versus sort of regional and the impact of smaller banks and the potential impact of restraining credit flow and lending, from your perspective, is that a constraint within the MENA region?
I think, I mean, to go back to Hans-Peter's point, the major challenge I see is about the de-risking, basically. That's really something that is, because again, there's always a debate, as everyone here knows, about whether you have to look into that potential risk or you just avoid the risk. And we have seen clients coming up to us and telling us, okay, my bank account has been closed. They did not even give me any heads up. No one asked me questions whatsoever. They just took that decision. As a result, my business is at risk, etc. They go and try to open another account with another bank, and sometimes it works, sometimes it does not. But depending, of course, on the type of business that we are talking about, if I'm talking about a non-profit organization, higher risk when it comes to making sure that the funds would reach those people who are facing difficulties. So there's really a fine line, and it's the challenge that we are seeing, which yet is not addressed properly, I think. I think there's still an issue about, going back to your point about the information sharing and to which extent that becomes efficient. Because as I said earlier, compiling the information is one thing, but making the proper use and effective use of that data should be the target, basically.
And from your sort of legal background and legal view, do you think that the regulatory legal framework is there for organizations to actually do that, or do you think that is just too much of a risk and it's not enough clarity in terms of the ability to do so?
So the laws, I mean, we see, of course, wherever there have been gaps identified, for example, by the 2008 review by the FATF, etc., of course, as we know, the UAE is working very hard towards addressing those gaps, etc. So there are new sets of regulations. So the laws are here, but yet, of course, for some of them, it's very recent, so we are yet to see how enforcement, how effectiveness will be applied. But of course, this is work in progress, and those are positive points. But ultimately, it's also a matter of identifying additional gaps, which I see in practice. So for example, we are talking a lot about financial institutions, but I see a lot of companies actually, so in the private sector, as clients approaching us because they are private companies and they do not fall under the definitions of either a financial institution or DNF BPs, basically. So they are like, okay, you're telling me that I should do A, B, and C or report. This does not, they would consider for X and Y reasons, which are good or not necessarily right reasons, that they shouldn't report or they shouldn't be proactive in the approach, you know, so they are trying somehow to escape from the burden and their responsibilities by playing with the if I may say, and the gaps in the laws or points that they consider that are not covering them or addressing them, you see what I mean?
Mm-hmm.
So.
And Hans-Peter, that's a good point in terms of, so going back, Hans-Peter, to the current public-private partnership arrangements, it's a fairly select group of banks who participate. It's a fairly select group of individuals within the public sector. And going back to the point that was made before in terms of where does the small banks fit in terms of being able to benefit potentially of understanding the risk profile within their business. But then the fifth anti-money laundering directive and other anti-money directives expands that requirement as well, right, to accounting firms, law firms, you know, to other segments. And you know, we'll probably have most of representation here from the banking community. So what's your thinking there in terms of either A, expanding that pool of organizations from the banking sector, then also expanding it to other non-banking sectors as well?
I will come back with two answers, two very different answers. One is to smaller bank. You showed the example of the Latvian bank that was out of business within 1 or 2 months. And I think that is very telling. I've done a lot of work on reputation risk because as a Swiss bank, we always had reputation risk, and I thought the day when I wake up with Abacha in my portfolio, I will have to commit suicide as a compliance officer. When everybody had Abacha, my legal department told me we don't have Abacha, we've even kicked him out, so I told the world, we are the masters of the universe. We have seen this 5 years ago, and 2 years later, I found out that I had an Abacha account. I can tell you, as you can see, I didn't commit suicide. And then I thought about it, and reputation risk to me has a lot to do with the share price and the value of a company. So the market had factored in that we have this kind of relationships, and therefore the share price did not move. So this is observation number one. But observation number two is now when Den Danske happened. Mm-hmm. Den Danske's share price suddenly lost 20% on the share price because of the involvement. And the smaller bank went out of business. And therefore, I think the public view and the regulators' view on this has changed completely. Mm-hmm. If you, as a smaller bank, are found out because you thought being a bit more flexible with the rules is the perfect niche to be in, if you are found out with this, you can be dead fish in the water from one day to the other because your correspondent banker will tell you that he has stopped or closed your account. Second, correspondent banks themselves look at Deutsche Bank is now going through a review because they were the correspondents of Den Danske. Den Danske was a very reputable bank. JP Morgan's were their clearers in the US. They're also under. That means they can only push up their regulatory requirements, their monitoring systems, and that will make life for smaller banks more difficult. On the other hand, I know a lot of clearing banks, my friends in the Wolfsburg group, they all are worried about this tendency and try to help the smaller banks. But they have to realize that those smaller banks, you have to live with this regulatory burden, you have to get your act together, you have to create transparency and keep your correspondence up to date. And whenever you should have an accident, which can happen to everybody, but call them immediately, tell them before they read it in the press, because otherwise they just might turn off the liquidity to you.
Yeah.
That is. I think there's a lot of sympathy for smaller banks and what they have to do. But smaller banks also have to realize that the world for them has changed. They no longer just have the benefit of doubt or that they are out of the limelight. They will just be cut off. That is the world how it is. And even when what we now see is so-called nested relationships where you've moved your account from Chase to a regional clearer, the regional clearer will react the same way because he will be asked by Chase who he's got in his portfolio.
Yeah.
So this is just coming.
Yeah. Antoine, I would love to hear your perspective from particularly from the MENA region, the point that Hans-Peter made and the example that I tried to illustrate anyways is, people think of smaller banks as not being risky when actually it could have secondary effects to the regional bank, which then kicks up to the correspondent banks, and just your thoughts on
well,
that.
let's start first with a bit of statistics. Smaller banks or even MENA banks have experienced between 25 to 30% reduction in their correspondent banking relationships. So the term de-risking fits our region quite well. Number two, unfortunately, we believe that a large part of correspondent banking relationships reductions are caused by profitability and not necessarily due to the risk of having reputational risk. So that has to be put out there. When it comes to smaller banks more specifically, since the number of transactions are quite low, and they also don't promote their technology and their efficiency and reorganization. Let's remember, just to go back, just to talk a bit more of what's the number one issue for a smaller bank? It's not only technologies to get their organization processes properly correct. So they're to blame somewhere in there. So this is from my perspective. So you have two opposite extremes. One person that's not fixing their organizational processes properly, and then you have the larger banks that are not making enough profitability from there. So are we reaching the objective of reducing financial crime? Personally, I don't think so. So there's a mountain there that we have to surpass. Hence, going back to the importance of the larger banks lobbying for the smaller banks. And the larger banks teaching the smaller banks, look, these are the right ways of doing there for you to be able to survive. Because as Peter said, the world has changed for them completely. There's, your bigger brother is not going to defend you for so long. So these are very important remarks to be made.
If I can just comment here, because, for everyone sitting in this room, I think it's important to mention that the banks, we are talking about the small banks. From my experience, at least, I see that local banks and small banks are working hard towards getting up to speed with the regulations, etc. And ultimately, they might raise the argument that the banks that have been fined by OFAC, etc., and the major fines were for global banks as opposed to the purely.
I'm going to be nice to Peter. Every single one of Wolfsburg have gotten a fine. Every single one.
Yes.
But it's factored in within business. Yeah. And it's part of the cost. It's operational cost at this stage.
Yeah. So going back to the premise of, and again, commend FCCG and Wolfsburg, in terms of the information sharing. Information sharing doesn't necessarily have to do with sharing transactional information or even conceptually names. but actually just business practices, and for the bigger banks to actually understand and
Absolutely.
learn from the region where the risks are. And
Look, if you don't mind me just
Please.
intervening very quickly. Going back, Peter had discussed this in his speech, going back not so far long ago, how did banks create a risk rating system for retail? They created something called the information department within each bank. And they found a loophole in the system where you don't share information on paper, but you do it via phone. So they call each other up and say, look, I got this guy asking for a credit card. What do you know about him? And they got law firms going in and seeing, does he have any lawsuits against him? And these are practices that I'm sure half the people in this room either have done it or continue doing it. However, oddly enough, when it comes to compliance, we've lost our North Star. I haven't very rarely seen compliance officers call each other up to discuss clients. They discuss processes, organizations, regulations. They're drowning in this concept of fear, regulatory fear, while, 2 steps down their offices, there's an information officer breaking every rule of regulation, calling up another bank and saying, what do you think of this guy? It is truly, to me, it's baffling that the banking sector was not able to find these loopholes. Please don't quote me on this.
no, you're on TV.
No, but
Okay, so
no, but Antoine, here the banking sector, and of course you always have those back channels. That is clear. But as I said, there are other industries such as the insurance industry or retail banking,
Absolutely.
where it is allowed. But in most cases, for privacy reasons, you cannot share that information. If you would be allowed to share for valid purposes information among banks about certain clients, that would really be helpful.
Yeah.
But that needs a public act, and that's why I say it's public.
But
public
Peter,
private.
did you know one thing, that there's a loophole in all of this? Because data information about a client not only includes compliance-related information, it includes the entire information. So I had asked a legal team that has to do with the Union of our banks and said, guys, why is it insurance and everybody else could do this? I said, you know what? There are legal terminologies that if the client signs a waiver, just like when you ask for his risk rating, as long as this information is not going cross-border, there is a possibility for banks to be able to discuss client information, just by using the same channels as they used to for credit information.
But to Hans Peter's point about the role of the public sector here, I mean, we've talked a lot about big banks, small banks,
Yes.
in terms of that relationship, but it's in terms of your observations on the role of either regulators or even the government or even law enforcement to provide some kind of legal clarity for banks to be able to do this.
So, I mean, you see there's actually an increase, there has been an increase with the regulations, and at the same time, the reporting systems are declining, basically. And there are a lot of STRs being filed, let's say, but ultimately, I would say probably 90% do not give the right effect when it comes to criminal action, etc. So again, we are in a system where the information can be shared, etc., but we are not reaching the sought result when it comes to effectiveness. So I know that, I mean, central bank and other institutions are working very hard towards fixing and addressing the gaps, but again, this is something, it's a challenge, and there's a lot to be done in terms of reaching that stage where we will be able to get something out of it. you know.
And Hans Peter, to your point, you're just about to get to that in terms of the role of the public sector, and how do you see that in your experience and maybe even in the MENA region and where we need to go?
As I said in my few words, I think we have made progress where the public sector has helped the banks. It's not a one-way street, so the public sector has to take responsibility for the information they have. On the other hand, they probably should think whether all the information they have asking for from the private sector is really helpful and fulfills the purpose. To give you an example, we all have now those nice payment systems such as PayPal, or we have this great Western Union, and they are subject to different rules from the banking system. There is some kind of unformulated de minimis rule that PayPal and those internet payment systems can go up to 1,000 or 2,000 per transaction without doing any filtering, without doing any KYC. So we have created a part of the financial system is allowed to do small payments without all the burden of control. Whilst when you do the same payment through the official financial system, then we have to load it with what has been developed to go after bin Laden. We now should use to find the 600 Swiss francs that should go to a sleeper in Somalia. And we know that this is impossible. And therefore, my appeal to the private banking, to the public sector would be to say, think about effectiveness, think about the smaller banks, and why can't we say each payment below 1,000 threshold does no longer need control? Mm-hmm. That would take a lot of burden from the smaller banks because they are operating in those dimensions, and from the bigger banks, and create a level playing field. Mm-hmm. So that's why, on the other hand, if the public sector is so worried, they should share more information for us. Mm-hmm. And where they don't share, and that brings me back to the effectiveness, if we were not given that information, we should no longer be held responsible to look for something that we cannot find. Mm-hmm. That is my appeal to the public sector.
Antoine, what are your thoughts about, what do you think the likelihood of that is in MENA?
If I look at the burdens of culture, if I look at the burdens of available technology, if I look at the burdens of de-risking, all of these things are going to eventually push the public sector to intervene. The issues are, in anything that we do, there's reward and punishment. These are the basics of management. These are the basics of strategy. Up to now, the financial sector has never seen the rewards, has only seen the punishments. What do I mean by that? Rewards are not financial necessarily. It could, just exactly what Peter was saying, is that we give all this data. We spend so much money on creating these, generating these reports in order to facilitate the work of the government to capture, and we get almost to quasi no feedback back. I'm sure somewhere you're all going to laugh, but if an intelligence agency called up a bank and said, by the way, thank you for the great job you've done. You've helped us capture this criminal cell. We're going to send a letter, not saying who the individual is, to your, FIU and say, thank you for the great work that this financial institution has done. We were able to uncover this cell. Two things are going to happen. Number one, that bank is going to say, oh my God, they're going to thank me. That means I'm certain terrorist areas. I'm going to have a bombing in back of my branch.
Personal liability, right?
Yeah.
Exactly. And number two, there's got to be somewhere some sort of recognition or at least some sort of feedback. Mansour discussed that it's part of the plan, but it's just not coming too soon. Investments are staggering. The question is, what is the financial sector getting in return? Peter?
We're not looking for love from the regulators, but
but think about it.
But encouragement would sometimes do good. But to be probably a bit more realistic, I think if it holds true that FIUs only follow up on 10 or 20% of the SARs we are filing, then something must be wrong with the remaining 80. And I think it is worthwhile to sit down together and then decide why those 80% were not helpful. Did they lack information? Yeah. Or didn't the FIUs want that in the first place, so that in future we no longer have to file that stuff? It would make life much easier for the FIU if they don't get crops that they don't need, and it would make life easier for us if we don't file things where we think this might be important for them. But just sit down as you would do in a production line and say, how can we stream the process so that at least 50 or 60% of what we are filing is really valuable in the end?
Yeah.
That is
And I
Your
think
thought,
we
please.
probably need to distinguish between, I mean, as Antoine mentioned earlier, the whistleblowing. I mean, whistleblowing, the concept itself is very new to the region. And as a result, there's no reward because as per the provisions of the penal code, for example, it's an obligation to report the knowledge of a crime. So as a result, there would be no situation whereby someone who had reported a financial crime instance, like what would happen in the US, would get billions of dollars or become suddenly extremely rich. On the other hand, you have the reporting basically requirement, which would apply not just, I mean, we could expand on your thought, Antoine, in terms of not applying only to the financial institutions, but rather also considering whether some kind of system could be put in place by the authorities, whereby reporting by a private company would also be something that would be listed as mitigating factors, because we see, as I told you, a lot of companies approaching us, and they are aware of something not proper going on. So when we suggest that they report to the authorities, to the central bank, to the financial intelligence unit, they're like, no, but listen, I'm not a financial institution. Why would I do that? There are risks for me, etc. So I would rather wait until something happens, or I would somehow try to find a way to stop this relationship with that client, as opposed to voluntarily disclosing. So maybe if they were in a position whereby they know that the authorities would be thankful and would acknowledge that positive reporting, that would be something that would make a difference.
Shay, an interesting report Thomson Reuters had done, I think in 2016, it was about Iceland. Iceland, they give a reward between 2 to 5% of any amount of money returned from a whistleblowing. So that's one.
That's on the whistleblowing side, right?
Number two is, what about the auditing and legal firms that are witnessing? I'll give you an example. The example that you showed us. We know that that bank closed down, but that bank had an auditor. And that bank had an auditor that helped, investors and all these things. They went in, they flagged all the transactions. Curious to ask, the name of the auditor is almost never mentioned. And the cases of where audit firms were legally prosecuted for their lack of involvement in finances are quite weak. I speak on behalf of the UAB. We find that appalling that the banks take all the whipping while the entire industry that comes around it is almost left untouched.
Yeah. So certainly within Europe, within fifth anti-money laundering regulation, there's a recognition of exactly that, right? That there's a rich ecosystem of other enablers. I'm not familiar enough with the MENA region, but that has definitely been recognized in terms of
In
that
the MENA
point.
region, there are very few countries that they go to the ripple effect
Right.
of a case like that.